This segment is proudly brought to you by 3P, the Wealth Creators, and Home Edge Finance, our experience, giving you the edge in home and commercial lending.
Yes, Ziggy here, and welcome to the finance segment Money Does Grow on Trees on GRTV. On the show, we cover all things money, and we welcome your email questions. The question that's selected to be covered on the show will receive a free copy of my book, Money Does Grow on Trees. Today, we are following up on Anastasia's question on insurance from last week. Now, today is part 2, but if you missed part 1, let's recap a little. A well-constructed financial plan has 2 parts, wealth creation and wealth preservation. Wealth creation is designed to build and preserve capital based on the assumption that you will have good continued health and live to a certain age. Wealth preservation, on the other hand, is transferring the risk to someone else in the event that something may happen that will prevent you from meeting your long-term financial and lifestyle objectives. Personal insurance is a simple means of transferring risks from individuals who cannot afford to retain the risks to the insurers who can. So why have personal insurance? Well, personal insurance management is important to relieve you and your family of financial burdens associated with the loss of income if an event occurs. Now, an event like death or permanent or even temporary disablement in your prime working years can be devastating for all the family and not just the person affected. Insurance provides peace of mind that you and your family are financially secure while providing an ongoing income, debt repayment, a replacement housekeeper, maybe a nanny while your children are young, and possible funds to meet your children's future education needs. In recent years, you would have noticed the rise of direct life insurance. There is a fair bit of it going around on TV, and usually you'll see a lot of direct selling during daytime TV programs. But I offer a word of warning if you're thinking of purchasing insurance directly in this way. Now, I understand it may seem an easier process, that it can all be done over the phone, and that you don't need to see a financial planner, but here are a few reasons for using a financial planner and not going direct. Firstly, there are subtle differences between insurance products. For example, with income protection, you want to endeavour to lock in an agreed benefit contract. This means you not only want to make sure that you are medically but also financially underwritten at the application stage to secure agreed income protection benefits. Secondly, many of the direct life insurance policies have many exclusions because the less underwriting that gets done, the more exclusions there need to be on the product to keep the risk pool the same. Thirdly, will you be covered for everything you think you're covered for? Will you get the money when you need it? And who will help you at claim time? And the last point, fourth one size does not fit all. Given the myriad of products out there, it is your financial planner who will recommend a product that is suitable for you and in your best interest. And certainly at claim time, it's your planner who can provide valuable support and assistance to you. Well, that's the end of the segment, but before we go, here is this week's funny finance phrase. What leads most people into debt? Trying to catch up with the people who are already there, of course. Remember to email your questions in, and if your question is covered on the show, I'll send you a free copy of my book, Money Does Grow on Trees. On behalf of GRTV, I'm Ziggy, and remember, money does grow on trees. Yassas.